The Chinese President Xi Jinping has kind of announced the new normal for Chinese economic policy, which is to encapsulate the fact that China's growth is no longer going to be in the range of 10 to 14%, ripping along as it did after accession to the World Trade Organization, but we're now in a period of slower growth, 7-ish%, maybe a bit lower, where the main focus of economic policy is on stability and on the quality of that growth. Now, you might think that that has negative implications for gas markets, and it's certainly true that the slowdown in China, reflecting the end of the cycle of investment in infrastructure and industrialization, has coincided, not coincidentally, with the end of the commodity supercycle. And so part of the reason gas, oil prices and coal prices are lower now is because of this transition in China. But actually there are some opportunities too here, because the Premier, Li Keqiang, recognizes that richer countries are also cleaner countries, and clean burning fuels are fairly important to growth and productivity. So China still burns a lot of coal, it's very dirty, and it's killing its people quite literally. There are 1 million premature deaths every year in China, largely from coal burn. And recent work from the World Bank, former World Bank colleagues, shows that China's taking a hit of about 10% to its GDP every year from burning so much coal. So there's a strong impetus at the highest levels of the Communist Party in China to transition from coal to gas. And so this creates potentially some substantial opportunities in gas markets. The big opportunities really depend upon how fast China moves down this trend. So if China really goes along what might be described as a broadly business as usual path, something I'm going to be talking about shortly, and Aurora has done the research on this and the numbers on it, then there are big gas opportunities, but they're likely to be taken up through the pipelines, so pipeline gas from Russia, in particular also from Turkmenistan. But if it pushes a bit harder on scaling down the coal and pushing up gas and cleaning up its skies and increasing the productivity of its citizens, then we could see really substantial opportunities in the LNG space, which would be the flexible response to meet that demand. As high as 70+% of the additional demand could be satisfied through LNG, and that would mean potentially a few hundred BCM of opportunity in gas markets by 2030. It's a long time, but that's a big number. It's the same order of magnitude as the whole LNG market today. Well, the risks are that China's transition ends up being an unstable one. It's obviously a very big country with a major demographic shift underway. It's got various tensions with its neighbours, and it's a fragile political and economic environment. So over the course of the 10 years, really the big question and the big risk is a geopolitical risk. If we have stability within China and a strong push towards economic development, cleanliness, prosperity, then we'll see these grand opportunities in gas. On the other hand, if we have a more militaristic space where conflict breaks out, we may see real problems, and you may not necessarily be wanting to have a huge exposure to China in that sort of scenario.